Hello, everybody. A lot of very high return options all around. With bank FDs giving lower and lower returns, I see a lot of investors wanting to get into high returning instruments like peer-to-peer lending. A lot of fintechs are in this space, and recently Cred and BharatPe have come out with their peer-to-peer lending offering. So what is peer-to-peer lending and what are the risk factors you need to keep in mind if you're intending to lend money on this platform? First off, how does P2P lending work? Well, you have a platform that gets together lenders and borrowers. So these are typically borrowers who have lower credit scores and may not be able to get money from a bank or want loans really fast. And on the other side, you have lenders who want to invest money at a high interest rate. And essentially, they're looking at lending money to these borrowers for a high interest rate. These are essentially unsecured personal loans, which means that they are extremely high risk. Typically, the loans are for shorter tenors up to 36 months, and most of the loans tend to be for amounts of lesser than 1 lakh rupees, and borrowers can borrow it for any purpose. They don't really need to specify the end use. For lenders on the platform, a couple of things that you need to keep in mind. Firstly, P2P is regulated. It is regulated by the RBI, and P2P platforms have to be registered with the RBI. So any P2P platform that you are on, the first thing you need to check is whether they are registered with the RBI or not. And if they are, it will be mentioned on the platform. Couple of other rules that RBI has. A lender cannot lend more than 50,000 to a single borrower. In fact, across platforms, lenders can only invest a maximum of 50 lakh rupees. And the moment they invest 10 lakhs or more, they need to basically give a net worth certificate. Borrowers are also not allowed to borrow more than 10 lakh rupees across platforms. Now, when we look at the various offerings that are there. So the typical P2P works this way, that the lender comes on the platform, looks at the list of borrowers, looks at their credit history and other factors that have been listed out, and chooses the borrowers that they want to lend money to. In case of Cred, they're saying that they typically have borrowers who have credit score only above 750, and that's why the interest rate that they're giving is also lower than most other platforms. So most other platforms have interest rates ranging between 11 to 25%, but in the case of Cred, the interest rate is 9%, and that's because of the fact that they have a better quality of borrowers who are available on the platform. Further, what Cred is saying is that they're going to take the money from the lender and they're going to diversify it amongst different borrowers. It's not going to be like each lender is going to get to choose the borrower, unlike most of the other platforms. So should you invest? Well, the only pro that I can see of P2P lending is that for a 36-month period, you can get good returns like 10 to 11%. But always remember that with very high returns comes very high risk. For decades and decades and decades, we have been seeing cases where anybody who's promised a very high return has defaulted with the money, whether it is chit funds, whether it is DHFL, or it is Franklin Templeton itself, where consumers had to go through a lot of trouble to actually get their monies back simply because they were invested in high risk options, right? So the biggest downside of P2P lending is the default risk. When we look at globally, especially when we look at countries like China, the default rates are very high. In fact, they say that almost 20% of the borrowers on the P2P platforms actually default. And there are many companies in China and Korea which are actually under tremendous amount of strain. Also remember that the P2P platform is not responsible for any losses, and they might try to help you to recover your money, but it is not really in their mandate to do so. So remember that when you are investing in such an instrument, and if there is a default, you will pretty much have to figure out how to get your money back. And I don't think that's a very easy task that any individual can do. My take, I would actually stay away from this investment. simply because the concentration risk is very high. You're allocating capital to somebody. In case of a default, the entire capital is going to be lost. The other part is also, is this what you really want to do with your money? Do you actually want to be like a local lender who's just lending out money? If so, you can actually also do it locally in your community as well, right? I firmly believe that when you invest, if you want to take risk in your investments, do it with stocks where there are so many stocks available, there's so much research available for you to actually choose instruments, and all of these are very highly regulated. So, instead of going in for a P2P and trying to make a high return there, I would actually prefer to put investments into an index fund or into stocks where it is highly regulated, more transparent, and a lot of publicly available information is available, unlike in the case of P2P lending. So please stay away from P2P lending. There are many other better ways to actually make money. Make sure you click on the bell icon to subscribe. We do look forward to your feedback. Till then, bye-bye.